Hey everyone, welcome to Bald Guy Money. I want to say from the start that this is a very important installment of my program, of my YouTube show, because there are clouds on the economic horizon and people are asking me almost on a daily basis, how safe is my money in the bank? So in this video, I want to discuss some of the latest data and news stories that are exposing the growing cracks in the world's economy and banking system. I will give you my take on how safe I think money in the bank is right now. And finally, we'll discuss why I am quite literally banking on gold and silver right now to make sure I am positioned correctly for the day the house of cards finally comes tumbling down. Now, I want to start this video off by covering the situation in China, and it's probably not the story you're expecting because I haven't seen anybody covering this. And that story is that the Chinese yuan is in trouble. Now, we all know that China manipulates its currency to keep it trading in a certain range versus the US dollar to make Chinese exports more attractive for buyers outside of the country. And I've talked about that countless times on the channel. Just go back to my last video about China if you want to know more about that. But with China's economic recovery stalling and a sell-off of the yuan happening as investors assess risks associated with the current state of US-Chinese relations, the yuan has reached a level that is at the very bottom of what the Chinese Communist Party has historically been willing to accept. And that is triggering panic, not only in China as they search for ways to bolster the economy and their currency, but also in the United States. And it's triggered enough panic that it compelled Treasury Secretary Janet Yellen to make a stop in China about 2 weeks ago to discuss how the United States can lend a helping hand. Because this is the part of the story that doesn't get talked about in the mainstream media. And it's the fact that China is slowly selling off some of its US debt on the open market to purchase yuan to prop it up in something that's known as a currency intervention. Now, these kinds of interventions happen all the time. It's nothing to worry about in itself. But China is the second largest foreign owner of US debt. And big sales from them can cause rapid devaluations in the US dollar, and considering the fact that the United States imports a lot of their consumer goods, that doesn't bode well for inflation. But more importantly, it doesn't bode well for US banks, because as you can see here, banks, using your money, have purchased an awful lot of US debt, something to the tune of 5.5% of all US debt. And with that number now well above $30 trillion, you can do the math on exactly how much they hold. So if China decides to sell off a lot of its US debt holdings to buy yuan and prop it up, that means the value of the bonds being held by many banks is going to be lower. Because after all, you have to give incentive for the market to buy the bonds, and the more supply there is, the lower the price goes. That's economics 101. And that's ultimately why Janet Yellen went to China. She knows the US banks are still standing on very shaky ground, and she's also very aware that the United States government is not in a position to rescue them. I mean, the truth is they couldn't afford to rescue Silicon Valley Bank and Signature Bank back in March, but with interest payments on US debt expected to eclipse defense spending very soon, it would seem to me that the situation is becoming dire. Because as you can see in the chart on the right from Piper Sandler, federal government receipts, also known as tax and collection revenues, are dropping significantly. And it's a clear sign that the US budget deficit will likely be larger than has been projected to be this year, as well as a sign that we are indeed headed for an economic downturn, just like we saw in 1980, 2000, and 2010, as this image so clearly illustrates. So, with that said, it brings me to the second part of this video where I tell you all exactly how confident I am in the global banking system. And I want to say in advance that this doesn't only apply to American viewers, this is absolutely a global topic. Because what you have to keep in mind is that the financial system is so intertwined that contagion in one part of the world can take down markets in other parts of the world. And when I saw this graphic from S&P Global, I saw an older version of this on Twitter before looking up the full report to get the latest data. But what you can see here is the number of bank failures in the US. Those are the numbers in the yellow circles in relation to total assets at failed banks. And this chart is intended to show the lagged cascade effect large bank failures have on the banking system at large. And although it's not a guarantee of what's to come, it certainly suggests that we have only seen the beginning of bank failures. And I will link the full report up in the description, as I do for all of my data sources, for those of you who want to check this out for yourselves in deeper detail. But I will say this before moving on. I recognize the need to keep money in the bank in the 21st century. I have money in the bank, and I am by no means suggesting that people need to take all of their money out and put it under a mattress. This is not that kind of channel. I am not that kind of person. What I am saying is this is a moment where I'm being extra cautious. I'm starting to hedge my positions that I had on the stock market, just as I covered in a recent video, because I think we are reaching the top of this rally. Check out that video if you haven't seen it. But now I'm also beginning to hedge my exposure to the banking system. I don't have a crystal ball. I can't tell you exactly what's going to happen, but I see enough parallels to past banking crises and other foreign currency collapses to say, now's still a good time to put a little cash into gold and silver. This chart here is an update from a video I did on what happens when things go wrong. This example is specifically for silver, but the same idea applies to gold, and it's that as the Turkish currency has crumbled under gross mismanagement by the country's leader, Erdogan, those who had real assets like silver and gold were able to protect the value of their money. And although I expect a significant run-up in the price of metals over the next few years, for many reasons beyond the dollar and banking issues we're seeing today, I'm literally banking on gold and silver at this moment for the same reason I take a jacket out with me on a warm summer's day. I'm doing it just in case. What's more is, I feel good about doing it, because here's another updated example from a video I did a while ago on lessons from stacking gold for 15 years. And as you can clearly see, when I buy the average price of gold during the course of a year, not only have I gotten used to getting real nominal returns, but I've also done slightly better than inflation. And that's almost been a guarantee since the beginning of time. And that's not to be interpreted as advice or opinion. That's just how I interpret the facts based on the data. So those are my arguments in a proverbial nutshell. And now it's time to move on to the viewer question for this video. And remember, I try to answer a viewer question from the comments section in every video, so please feel free to add your questions to the comments section of this video now. In the least, I will reply to you with text. And this video's question comes from Jay Henson, not to be confused with the Muppets guy. And he asks, what do you think about gold stocks? And by that, I assume he is talking about mining stocks. And as I said in my reply, I have been unsure about the mining stocks because of rising costs. I have a small position in Newmont, but I hadn't really given it too much thought as my portfolio, my stock portfolio, is traditionally focused on tech growth or high-yielding dividend stocks, which, although I have sold some of my stocks, nearly 15% to be exact, to roll into gold and silver, and I've talked about that before, I haven't sold them all. And what I can say is that I sincerely believe there are some mining stocks, namely a few listed on the GDXJ index, for those of you familiar with that index, that are becoming interesting simply because I see their costs stabilizing over the next year or two. And the truth is that when metals boom, those stocks will also do very well and yield some huge returns if you can pick the right ones. And if that's something you're all interested in seeing, please let me know in the comments. I haven't dug deep enough into the GDXJ stocks to pull out those names, but I can cover this topic in a future video with some of my specific targets for big growth moving forward. And for those of you who can't wait to hear me speak about this, I've decided to start being able to answer this question better, to dig into the GDXJ a little bit as an index, and I will be covering that on my Patreon tomorrow. Link to join my Patreon is in the description of this video, as well as the pinned comment. It doesn't cost all that much to join, and you can cancel at any time. I just published an in-depth guide for people interested in Bitcoin there, so if you're interested in getting my thoughts on other topics, as well as hearing what I have to say going deeper on the topic of metals, that's the place to do it. But if enough of you request the topic of mining stocks here for the YouTube channel in the comments section, I promise I will cover that in depth right here for you all. And with that said, that's it for this video. I'm wishing you all a fantastic weekend ahead. And as I always say at the end of my videos, take care of yourselves, and please remember, we're all humans. Let's please take care of each other. See you in the next one. Goodbye.